Hello, traders. It is February 28th, Wednesday, and it is time for our live event. This event is going to be filled with educational content, and the way that I like to start all of them off is with a review of our previous picks. So I'm going to go through my picks very quickly. Then Harry's going to go through his picks. If you just followed these, I don't even know, over the course of the last 6 weeks or so, I don't even think we've had more than one miss. And even then it was marginally a miss. So last week, GRMN, Garmin, that was the stock that I highlighted. I really liked the price action. I love the breakout post earnings. And there you can see it spends about 5 days compressing, congesting, holds the AVWAP-E. Boom. Big day today. Here's one that was actually prior to Garmin, VKTX. Look at this monster. That stock doubled in one day, and it's still pushing higher. Would I chase it now? Would I need to be long now? I wouldn't necessarily be chasing it at this level, but it does look like it's going to continue to go higher. But if you are long, you stay the course. It could go parabolic. It already is to a degree. You wait for a long, red, bearish, engulfing candle, then you get out, not before. I had a couple of stocks that I highlighted this weekend, so I'm going to go through those very quickly. MCD was a bullish put spread, selling below this horizontal support, and AVWAP-E also had the 50-day moving average. You can see how the stock has bounced off of that. Very nice. That was definitely available for a 50-cent credit. That was selling the 290, 287.50 options that expire in 2 weeks. Also went into my what am search and highlighted ARM as a what am trade. And there you can see we're selling the near term at the money options and buying a farther out in time option. That still looks like a good play. NET, also a nice play, selling below right here and buying a out of the money option right at that support around the $90 level. The point is that right now, premium selling strategies are really a decent way to generate income while the market is doing nothing. So without further ado, Harry, say hi to everyone, and let's get this event going.
Last Wednesday was Amazon, and it was at around 170 when I picked it. It's at around 173.50 now. So even if you just held it, you'd still be up $3.50 a share, or whatever it is you did on the options. I mean, you just go back for a second to what Pete was saying. I mean, we've been doing this now for what, 8 weeks, 2 months. Each week we do 2 picks, 16 picks. We're pretty much 15-1 on those picks right now. That means if every week you just, even we're paper trading, whatever, one share, practicing, took our picks just to see how they would perform, you would be doing quite well. That should tell you 14 out of 15, statistically, that's not luck. There's no luck involved in that because, yeah, we could, if it was all based on luck, out of 15 picks, maybe, a good week, we 8 right and 7 wrong, or 9 right and 6 wrong. You're not going to get 14 out of 15. So hopefully that, this is why we do this, to also show you, look, we're picking in real time. We're telling you, we're coming back a week later, and we're taking a look at how the pick did. And you could see 14 out of 15 times, you would have been in profit had you followed the picks. It's not an opinion. It's what it is. That alone should tell you there's something to this. Also, keep in mind, if we're using any acronym, and trading has a million fucking acronyms, trust me, I know. But if we're using acronyms you don't get, right, or things like WADAM, things like that, don't ask. Rest assured, they are either in the wiki, they're on the articles on the OneOption site. They're there. We're not going to use esoteric phrases and articles, phrases and acronyms, if they haven't been referenced in detail exactly what they are, when to use them, how to use them, why you should use them, in lengthy articles that all of you should be reading. So we're not going to answer, and this has been a thing previously, questions about what's a WATM or what's this. The information's there. If you decide you want to be a trader, you're going to have to put in effort and find those things. So that's part of it.
No one, by the way, is more transparent than Harry. He posts every single trade. He's doing a challenge right now. So how's the challenge going, by the way? And he posts every one of those entries and exits real time. So there's no question of what he's doing and why.
The challenge right now is oddly enough, it was up about $2,000. Now it's break even. But given the trades and some of the trades that went against it, the fact that the challenge is pretty much close to break even right now is in this market is good. I just closed Tesla the second time for a nice profit. The only trouble trade I have now, and the reason why we're not up a decent amount, is IBM, which never really recovered a bit and then never really kept that relative strength. It has 2 more days to it. So if IBM can recover, the challenge will be in excellent shape. And, you know, one of the problems I had with the challenges in the past was I always tried to very quickly double the account, to do a lot of riskier trades. And that's just not reality. Reality is challenges like these, if you're trying to double a $12,500 account, it takes time. It's going to take setbacks and ups and downs, and your ability to weather the setbacks, maintain your balance, get ready to prime to strike for when you find the right trade. That is the key. And it takes time. It may take a month, 2 months, whatever it is. This count will double. It's just going to take time to do it.
And you picked one of the more difficult trading environments to get started in too, because the market has been up so much, and now we're starting to get this loose type of price action. Dip, bounce, dip, bounce. And so this is a place to be cautious. It's telling us that there are sellers. After a big run, I'm expecting there were 2 scenarios that could have possibly played out. And it was paved by the big gap up that we had last week by NVIDIA. So this is the price action Thursday. This is when we did the live event. You can see how the market shot higher. It has not been able to advance since then. It's compressing. And we have been in kind of hand-to-hand combat since the FOMC statement, feeling that we could day trade this part of the move and do some WATMs and some out-of-the-money bullish put spreads and capture the majority of this move, which we've been able to do very successfully. And so right now, we had a possibility for a buying climax, and we would have broken through an upward sloping trading channel. We would have gone through the upper end, and a big long green candle through it would have been dangerous, because then we would have been watching for a bearish engulfing candle and a possible big retracement on the backside, because that would have been very, very frothy. It would have attracted a lot of profit taking. It would have attracted bullish speculators. They would have gotten flushed out, and that feeds on itself. But that didn't happen, and it wasn't very likely to happen based on the price action, because we had already seen signs of selling pressure. And so we are coming up on a turn on a racetrack. Time to take your foot off the accelerator, time to evaluate, time to observe. This is a time to have very light swing trading risk exposure. And based on what happens over the course of the next week, 2 weeks, we're going to have the information we need to tell us where we go next. Giving you a lot of analysis on a daily chart, because we're doing these videos on a daily basis, but the same technical analysis applies to a shorter time frame. And so I'm just going to show you a little bit of technical analysis on the open today. I told everyone our best trading opportunity would be a nice decline and a new low of the day. Here are my comments. Whoops, and there we go. So if you're in long only mode, you're just sitting on your hands. If you're short, here's what you're going to be looking for. If you're looking to buy, here's what you want to get. And then after an hour of trading, we had my comment. I'd feel confident taking starter longs here. Market tested the low, bounced, blah, blah, blah. Again, I'm doing this to validate that this is not just a bunch of bullshit. these comments are posted real time. And here's what I was looking at. We had this bearish 1OP cycle that had to run. That was going to provide us with information. Come in, test the low from yesterday, start to see this bouncing here. Now, all of a sudden, we're starting to see that there is a little bit of upward momentum as the entire bearish cycle completes. We're above VWAP. This gives me confidence that the market is going to rally into the gap. And this was a big tell. See the magnitude of that bounce that we had yesterday? This is a sign that buyers are out there. So this is in the back of your mind. Hey, I shouldn't be expecting the market to fall apart. Stacked red, stack red, stack red. Okay, now we're in bearish mode. And we have confirmation that the low is broken and that this bearish cycle played out. But that's not what happened. This is what's in my mind, that there are buyers out there. In here, we have the confidence to start taking long positions and that we're going to fill the gap, consistent with the comments that I've had. But this is fairly choppy mixed price action. So market's not going to go anywhere too fast.
I'm going to come in early with a pick. I have my pick for the week already.
Well, that was quick. All right,
Yep.
What do we got?
My pick for the week is Home Depot. You can go at low, but Home Depot, they're both on green royal flush. If you look at Home Depot right now, I like it a little bit better than low because low is a little closer to almost an all-time high resistance. But Home Depot, you have a nice little breakout here on the February 21st. You don't have to worry about earnings. Earnings are far off. On February 22nd. Then you have another breakout of this mini compression here going up. You have a decent orderly upward movement down from the low of in October above all the SMAs. It's not overextended. I think as long as the market continues to cooperate, and even on days like today where it's not, Home Depot is a good long pick, and I'm probably going to take some for the challenge as well.
Do you know how you're planning on playing that? Or are you going to use?
I was going to go with the March 15th, a little bit out. March 15th, 370 calls. The 0.8 delta, 370 calls. You can also go with the 0.6. I wouldn't go lower than 0.66, which is 375. Which is 375 calls. But I like to go a little bit deeper in the money. So the 370 calls for $11.20, 0.8 delta on March 15th is probably how I will play Home Depot.
Yep, those are going to trade a couple of dollars over parity. So you're going to get nice movement in it. And so 11.05 bid offered at 11.35. Would you try and get like 11.25? Would that be an order that you would put in? Is that?
I'm actually going to put it in for 11 and, on a little bit of a pullback, see if I get it.
Yep.
And I'm going to put it in for 5 contracts here at 11, have the order waiting there, wait for a small pullback, and hopefully I can grab those calls.
Yep, I like it. And the fact that you're bidding lower is also an important point because we can see that the stock is choppy. Okay, it's Home Depot. It's not NVIDIA. It's not marching. See, there you're getting your pullback right there.
Yep, and I just got it pulled long Home Depot. The 370 calls. I also have time on it, so I went out to the March 15th, which is also the monthly expiration for it, meaning you're going to have more volume. And got them for $11, and I did 5 contracts.
Here's another tactic you can use. So HA reversal, M5 bullish. I'm going to add that, and I'm pretty sure right now we're going to have a red flat top HA candle. So let's go into that. And we don't have one yet, but when we get a flat top red, then we're looking for the next flat bottom green. And when we get that, we'll get our alert, and then we can come in and we can evaluate how deep this move was. Now, if we get red candle, red candle, red candle right through VWAP, well, then you don't touch it, okay? You don't have any money on the line. You don't have any risk exposure. You wait to see what that dip looks like, and if it's relatively brief and shallow, then you know that when you get that bullish reversal, HA, and that alert, that this is a nice entry point for you. And that also gives you time to see what the market's doing. But right now, Harry has a decent market to work with. It looks like it's going to come in and fill the gap. And he's got a really strong stock. So he's not going to sweat this little pullback if it comes in even further.
Not in the slightest.
I like it. I think that's
SPY rebalance. Can't find any format articles. Again, I know it's a controversial thing, but you sign up for ChatGPT, get it. Basic questions like that, it's very good at. Hey, explain to me like I'm a 5-year-old why it's SPY rebalances. But until then, I'll address it. Obviously, SPY represents the S&P 500. There are 500 companies in that ETF. And in order to be in that ETF, you have to meet certain criteria. You have to have a certain number of profitable months in a row. You have to show a certain P&L on your company, earnings after earnings after earnings. Now, once you're in, it's harder to get out. But over time, certain companies, as you know, and you see in the news, fall off the wayside. And they either stop functioning or they start losing money. Either way, they no longer qualify to be. On the other hand, there are companies like Dell, for instance, or Crowd that have reached the criteria to be part of that ETF. So every quarter, there's a rebalancing. The companies that don't meet the criteria, they get kicked. The companies that do get considered. Then they vote on which company or company. Sometimes it's 2 or 3 that get kicked. 2 or 3 new ones come in, get put in. What does that mean for the ones that get kicked? It means their stock is going to drop pretty hard. The ones that get in, usually on average, you'll see about a 15% bump in the stock price over time because of the inclusion in the ETF alone. And that is because when the ETF gets bought, it goes into the stock. And so therefore, you're getting this, institutions have to balance with a certain amount of SPY ETF, for example, or S&P futures and so on. They're the most liquid indexes in the world. And because of that, when these companies get put in, the way Amazon got put into the Dow, their stock price begins to go up. It's also a reflection of the overall market's opinion of that company's health. We're confident enough to put it in the most popular index in the world. So that's what the rebalancing is. It happens once a quarter. It's, if you pay attention to certain articles, you will find the candidates, and usually there's about 5 to 10 candidates. But if you narrow it down, like this quarter, there's usually 1 or 2 really good front runners. Dell, for example, is a front runner. They will announce on Friday, and if it wasn't for the earnings coming up on Dell, I probably would be long Dell right now.
I'm going to highlight a stock that I put in the chat room, and this was ACMR. Put that in 20 minutes after the open. I love the earnings reaction. I love the explosion through all major resistance levels. Look at these trend lines coming into play right here. This is a considerable breakout. So you can see we've got some downward sloping trend lines that have been breached. We have a high plus right here that's been breached, major horizontal breakout, massive volume. This stock looks really good to me, and I like the early price action. And you can see on a M5 basis how the stock runs up. You get these long green candles. You don't need to be chasing in here, okay? Some of these are going to fail and they're going to retrace hard, but you can see how the VWAP is holding, and there is support there. Comes back and checks it once more. Mind you, what does all of this tell you? It tells you that this massive gap up in the stock is being supported by buyers. There is going to be some natural profit taking. Sellers who got in before this move are taking some chips off the table. But that supply is being met by buyers. That is why the stock cannot go down. So if you get these long stacked green candles, and then you see long red candles reversing it, that's no good. That tells you that the profit taking is very heavy and that this move is suspect. But when all the gains hold to this point of the day, that is a sign that buyers are lined up and it's going higher. So you set your alert, you get this type of price action, then you set your relative strong, relative weak alert, and you're going to get alerted probably right in here. I'll put one OSI up and we'll be able to see when you would have possibly gotten that alert. There's your dip. Okay, it's still compressing. I could get in here because it's still been able to hold all these gains. There you get your dip below and your cross above, and it's tested VWAP. Hello. It's probably about a $1.20 move higher on a $30 stock. ACMR. I like it.
Okay. Let's take a look here. A little bit of a dip in SPY. It's heading, this is the time of day where I tend to pay a very close attention to VWAP on SPY. VWAP has been pretty strongly established by now on the day, and it should act as a barrier, a decent amount of intraday support for the stock. One thing that was noticed the other day when Apple announced, they were cutting out their car thing and blah, blah, blah. And Apple started going up and SPY started going up. And you have to realize Apple still maintains itself as one of the largest contributors to SPY in terms of just sheer percentage of that it makes up the S&P. And the latest bullish run that we've seen, driven a lot by NVIDIA, that we mentioned previously NVIDIA would be a market driver. All this has been done without Apple. Apple has not been a very hot stock. I mean, I remember the days where it was all Apple, Apple, Apple. And now Apple's kind of fallen on the wayside and not doing much. If anything, it's sort of very bearish these days. So the fact that SPY's doing this without Apple is impressive, but it's going to start needing, today tech is down, for example, you're going to still need tech to drive some gains here and break out. And, right now we're at a natural resting point, but you look towards tech as well for, the industry or the sector that SPY is very dependent on.
Google also very weak. So we've got some of the mega cap tech stocks are showing some weakness. If you look at NVIDIA, AMD, those were the drivers a week ago. Those have started to move sideways. They're digesting gains. So you don't have this big tech catalyst that's going to fuel the move higher like we had in the last few weeks.
And no wonder Google is weak, by the way. I mean, I'm not going to get political about it, but how fucking stupid is it that you ask Gemini, is it okay to misgender someone if it prevents a nuclear war? And I checked this out and did it myself and got the result. And that's the only way to prevent a nuclear war, to kill 6 billion people. And the damn thing says no. No, even risking, even the fact that 6 billion people will die, you should not misgender someone. So yeah, they need to fix their friggin' AI. And you would think Google, with all the resources in the world, should be leading. They should be leading the AI charge, but they're not. And it's shit like this. So I do think it's an overreaction on the stock's part. It should be a hard fix, but it does show that there's an inherent problem there. I mean, I'm sorry, to prevent a nuclear war, there's not anything I wouldn't fucking say.
Along the AI lines, there's a lot of froth in AI. And when I say that, there are companies, IHOP could release a press release to say we're going to use artificial intelligence to make our pancakes. It's not, I don't think it's a publicly traded company, but that's the kind of news that would spike a stock up. And this morning we had Baidu that announced earnings, and they've invested a ton of money in artificial intelligence, and the stock is down. So nobody really knows who's going to be the benefactor or where the money is going to be made. But the one thing that we are pretty confident in is that they are going to need a lot of NVIDIA chips, and NVIDIA is definitely going to benefit from that. NVIDIA is also benefiting from the run-up in crypto. I do have a question on crypto and MSTR. Neither Harry or I trade crypto. I stick with equity markets, centralized marketplace with volume. Across currencies, across crypto, I don't have that key piece of information. And so you can trade the charts, you look at it. I'd rather trade US equities. So I don't trade crypto, but I do trade crypto stocks. And here you were long, or actually, I think you were
I
short
sold puts on MSTR a
MSTR.
couple of times and did
Yep.
fine with them.
Yep, and in my video 2-3 weeks ago, I sold some naked puts on Mara. That was a beautiful trade. Pulled back a little bit like this, but yeah, this is a great looking chart. Okay, you've got heavy volume. You've got this little tiny pullback here. This is a bullish flag formation. So there's your flagpole. It's breaking through a longer term high plus trend line that dates all the way back here. So that's nice. Brief, shallow pullback to a VWAP-E. See how nice that is? So you get this long green candle, and yeah, now we're releasing higher and higher. So MSTR looks very good to me. All the cryptos do. Mara, I'm just going to show that, and then Harry, you can chime in. So Mara, we were here selling a $19 naked put, and that generated, I believe, a 17% return because the option premiums were so high, and it was in 2 weeks. That's a really nice return. All I needed was confidence to say, I will buy that stock at 19. Please assign me. I hope you assign me. Never happened because I'd be a willing buyer there.
Yeah, never sell a put unless you're willing to own the stock at that price, number one. That should be your general rule. You should never be upset that you got assigned. You should be happy you got assigned because you kept the premium and you're assigned the stock at the price you wanted. It's better than buying a stock at the price it was because obviously it went down. Two, my issue with crypto is, I try not to trade shit I don't understand. And I'm sorry, unless your daily diet consists of Pop-Tarts and Mountain Dew, you could sit there and spout to your friends at a barbecue how much you know about crypto. You don't know about crypto, right? And you certainly don't know about what legislation or not or is going to come down, because one thing is for sure that politicians hate is shit they can't control. Now, they might be right, they might be wrong. Crypto might not be good for the financial system, might be bad. I don't know enough about it. What I do know is that it's unstable. Now, will it probably continue to go? Yes. Is it going up now because there's a halving event coming up where the amount of available, a finite number of Bitcoins? Yeah. But, is it going to be a sell the news event? Maybe. By the end of the year, will crypto be at 70, 80, 90, 100,000? Could be. But we also saw what happened earlier where crypto went down to like 15, 16,000. Are you willing to hold it till then? Stocks like Mara, Coin, MSTR, they are very tied in, highly correlated to crypto prices, but they still at least go with certain levels of support and resistance there. I'm not saying Bitcoin doesn't, but those are stocks that have a little bit more removed and they're a little bit safer to trade. So they're a good surrogate if you're looking to get into crypto rather than just buying crypto directly.
Yeah, so you had the volume, and the volume tells us if institutions are involved and to what degree. That gives us confidence that they are supporting the stock. I did have a question. This is a quick one. How do I get the M1 charts up in Option Stalker Pro? You've got all your time frames listed across the top of the chart, and you click that drop down arrow, and then you can select which time frames you want to have displayed. Click OK, and there you can see the M1 chart. We don't use M1 charts. It's too granular for what we do. So I would discourage it. You can look at it if you want. And the big point that I'm coming up to is Will and I are going to do a live event next week after the market closes. And we're going to go through all the option stalker features. So you'll be able to ask your questions then, and then we can keep this live event uncluttered from technical support questions about the software.
If you're looking at the M1 chart, the only reason you'd be doing that is because you saw a YouTube video. And on that YouTube video, some scalper was telling you about some 3-bar, 4-bar pattern on the M1 chart that they use. And that's what you're doing. So do yourself a favor, pour scalding hot water all over your feet, scream for a while, and forget about it. You'll save yourself a lot of pain. Just don't fucking do it. Stay away from it. There's no need. I have not used the M1 chart in years, if ever. I don't use it. No real professional trader will use it. If you're using it, you're scalping. And if you're scalping, you're going to lose. So don't use the M1 chart. It's there, just like every time frame is there. If you're looking at it, you pretty much have condemned yourself to lowering your account, because that's exactly what's going to happen.
I'll let you start off with this one, Pete and Harry. What type of trade management methods do you use when a trade is moving against you? Do you use hard stops, time stop, premium stop, delta stop, legging into spreads, blah, blah, blah. A lot of different questions there.
Yeah, I don't. I don't. I use a mental stop. That's all I use. I look at the daily chart. Look, and this is some of it's going to go in Wiki 2.0. I integrate a little bit of fundamental analysis in my longer term holds, right? So that comes into play sometimes. And occasionally that will override a technical stop, like it did in Moderna, for example. But overall, I will have a technical stop. That technical stop will be based on the daily chart. It will be based on a trend line or a simple moving average, some form of hard support. I will look to see how far that support is before I take the trade. Meaning, if I take a trade and say, okay, the next level of support is not for another $9. Am I willing to hold this stock through a drop to support? Am I willing to withstand a $9 drop in my position before I get to support and see if it bounces? And if the answer is no, I generally won't take the trade. If I'm taking the trade, it means I'm willing to withstand that drop to support, because sometimes institutions are going to say, I like this stock, I want this stock, but support is here. I am betting that I can get the stock at a cheaper price. In fact, I'm going to do what I can to drive the price down, and I'm going to drive it to support and buy it there. Does that mean the stock is weak? No, it just means that they're confident enough that it's going to bounce off support. They could buy it at support, get a better price of the stock, and then up it'll start to skyrocket. Hopefully you're getting and buying the stock on the other end of that, right? After it hits support, after it starts to skyrocket, after they start to buy it. But sometimes you get it before that, and sometimes it's going to go back down. And when it does, you have to decide how much pain am I willing to withstand, and am I going to hold this to support? Because if you're not, then you're pretty much giving up the trade anyway. Because a lot of trades, as you know, they're not going to be stress-free trades. You're not going to buy any up, 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 up it goes. And you're just going to sit back and wait and go, okay, I have enough profit now, done. No, a lot of times you're going to be like, I could have got in here or here. Now I'm down this amount and this amount and this amount. How long do I hold it for? Well, sometimes you get burned. IBM, I might be getting burned on. Other times you don't get burned. It comes to support and comes right back up. So you have to decide how much pain you're willing to withstand.
Yeah, I just recently wrote a very extensive article on stops and how to place stops. So if you're an OneOption member, please read about that in the system. One of the biggest problems with stops is that your entry point is not good. So if you're constantly getting stopped out and, gee, I stopped out too early and look, there it went, or gee, the trade went so far against me, I tried to give it room to move, and now I took a big loss because of it. Everything goes back to the entry. And for me personally, if I enter the trade well, then I'm expecting it to perform right away. And the reason for that is because I've got a shitload of checkboxes marked. The market lines up D1, the market lines up M5, the stock lines up D1, the stock lines up M5. It's got relative strength. It has heavy volume. It's got a breakout through a technical resistance level, a trend line above the moving averages. Check, 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 check. By the time I get into that trade, I'm very, very confident this stock is going to move, and it's going to move very soon. And when it does, I've instantly got some cushion in the trade. I don't place my stop at my entry, but if that's the warm fuzzy that I need, I know that I could. And I could stop out for a scratch and have unlimited upside. When you are finally in the trade, you look for continual confirmation from the market and what you expected the market to do, and the stock and what you expected the stock to do. Obviously, if the market's going up, you want the stock to lead the charge. So if the market's up and the stock is flat, that's not what I expected. And so you might want to pare back some of your position. If the market is down and the stock is continuing to march higher, awesome. Now I know I have relative strength. I've got confirmation. As soon as the market starts to gain support, I know that stock is going to fly higher. So I can stick with it under those circumstances. But it's continual evaluation of what your thesis was when you got in and what new information you have before you. And that's what determines your confidence to stay in the position. So
let me give you guys a little, those listening, lesson in probabilities. Let's say you say, you know what, I'm going to always put a 50% loss stop on my position and $1 profit. So great. I'll, when I make a profit, it's $1, I lose 50 cents. How can I lose, right? Well, what if, because your stop is so tight, and let's say the ATR of the stock is $2, more than 66% of the time, it's going to hit that 50% loss stop. It'll bounce back up and all that, but their stocks are volatile during the day. Like right now, you had a SPY dip, bam, there you go, your 50-cent stop is hit. So now, which is better, a 50-cent stop or let's say a $3 loss stop with a $1 gain? Well, let's say only 10% of the time you'll have that $3 stop hit. 90% of the time you'll have that $1 win hit. Well, do that 10 times. 9 times you're going to win $1, $9. 1 time you're going to lose 3. Your overall win after 10 is 6, right? Go now to the 50-cent and $1 one. Let's say 70% of the time, or even 80% of the time, because it's a volatile, 80% of the time, you're going to lose 50 cents. So there you lost $4. 20% of the time, you're going to make $1. Now you're -2 after 10. So your stops, you might think you're being smart by, oh, I'm making my stop loss less than my gain, but you're not, because you're not thinking in terms of probability. What are the likelihood a stock is going to drop $3 or break through support, drop $3? Well, that's outside the ATR range. It might be outside support range. Probability might be very low. Maybe 10% it's going to do that. So most of the time, you're going to hit your profit. But if you tighten your stop, a majority of the time, you're going to hit that loss. And that means you have to make a lot more profit to make up for the fact that there's a high probability you're hitting a loss. So you really got to think in terms of probabilities and statistics when you're doing stops as well.
Thank you, Professor Brzezzi. For those of you who don't know, Harry has taught statistics at a collegiate level. So yes, and he's a professional poker player. So odds are extremely important, and they are important to trading also. So I'm going to talk a little bit, because we've got a situation that's set up right here. Here you have a double top, lower high. Okay, no problem. We're expecting this gap to fill in here. This has been some pretty decent price action, but we can see there's mixed overlapping candles. And now we've got this bearish 1OP cross. We're expecting a small pullback. Check the VWAP, and the VWAP failed. I got to bail out all my long positions. This is horrible. This is not what I expected. When you have a lackluster market like this, you have to expect that you're going to be on the wrong side of the trade at times. And that's why you pare back your size, pare back your number of positions, go with the best of the best. And so when you get this pullback here, okay, yeah, so you might have gotten that wrong and we didn't bounce off of VWAP. But when it comes to trading confidence, you also recognize that this is a sideways market. This is a relatively low probability trading environment. We are probably going to stay. This is going to be the high. We've got confirmation of support here. We're going to stay here. And then you're going to get some bounces along the way. So you don't have to panic here. You are expecting that once this selling runs its course, there's no news to tell us that this is going to be a bearish trend day. We've already seen that from what's unfolded. The more likely scenario is this move's going to get exhausted. We're going to have some buyers. We've seen that buyers are interested here. We've seen that buyers are interested here. That is the confidence, and it comes from the price action. So you don't have to panic out of all your positions here. You're going to get the move back, and you'll have an opportunity to exit the position in the event that you do get caught on a bad day trade. And I'm going to take a look at ACMR, excuse me. Look at how well this stock has weathered that big pullback in the market. So even though my expectation was to bounce off a VWAP, then we go higher, stock will go higher, I'm not out any money here. It's holding up really well. That's our edge.
Look at IBM, by the way, during this pullback there, I say.
Yeah. There are definitely some buyers in IBM here. Gangbuster, no, you can see how it's compressing. This could be a good what am. I haven't checked the option premiums, but look, it's holding the support level beautifully. It's got that gap right there. So, and it has resistance. So this stock is just moving sideways in here.
It does make a good what am. By the way, you know, the Fed, a couple of Fed speakers, Bostic and Collins, have been just shooting their mouth off lately in the past 20, 30 minutes, which is pretty much what, you know, low volume dip on the market here, you probably attribute it to as well. You know, everything this year is about rate cuts. Once again, just like last year, the market is overly optimistic about the amount of rate cuts, but there is a balance there. Not to get too in the weeds, but the balance is the reason they wouldn't cut, the stronger the economy, the less chance they cut rates. However, the stronger the economy, the better earnings are on all of the stocks. So there's a balance there. The market's upset they're not cutting rates, but the reason they're not cutting rates balances it out because it's usually that there's a strong economy. Weaker the economy, the more likely they are to cut rates to stimulate the economy and realize that you don't get inflation in a weak economy there. So that is sort of the counterbalance that's also keeping the market up. But you know, the market has always been overly optimistic. Well, 4 rate cuts, 5 rate cuts. Everybody wants free money. Everyone wants easy money. You know, everyone wants to borrow at a 0% interest rate. But you know, the strong economy is the counterbalance to that. And in terms of economy, this, believe it or not, is still the strongest economy the country has seen, pretty much almost ever. If you look at it in terms of all the indicators. So right now, that is helping the market quite a bit. And even though the lack of rate cuts is probably disappointing, particularly for the tech sector, it being counterbalanced.
Yes, we want strong economic growth. I do not want a Fed rate cut because that would signal that the economy could be slowing. And yes, you might have economic releases that will temporarily cause a little bit of market selling because, oh, that means the Fed's not going to cut rates anytime soon. That's all temporary. The market wants strong economic growth right now. And we're really the only game in town because Europe is very close to a recession. We have China, just horrible issues in China. Japan's in a recession. So these are the largest economies in the world. We're clicking on all cylinders. So we want our economy to stay strong.
One thing to keep an eye, I'm sure, Pete, you are with China, is the worse their economy does, the more likely Taiwan becomes an issue.
True.
Because eventually that becomes a saving grace for them. Well, you know what? There's a strong economy over there. We're just going to take it. And if that happens, well, then all bets are off, I guess. But, you know, the macro level of events are easy to follow. What they're not easy to do is wait. And what I mean by wait is there are certain things, you know, the average retail trader will look at a piece of news and think that should matter a lot and are surprised when it doesn't matter at And they'll look at another piece of news that they pretty much ignored, and that's what's driving something. unless you are well versed enough, not just in economics and trading and the market and pricing in and what institutions do, but in macroeconomics, political, and all of that, to truly get a decent sense of how each news event is weighted, the only thing you can rely on is price action, which is after the fact, trying to anticipate a news event and what the response is going to be, or trying to gauge whether a response is overdone or underdone based on a news event, is asking for trouble unless you truly are qualified. And I know we think all very highly of ourselves, but institutions are actually the most qualified to make those judgments, which is why the price action, which institutions guide, is your best guide to how those news events are going to make an impact. If you try to do it yourself, making a mistake there is very dangerous.
I have a day trade that I would be lining up here. I like it as a swing trade too. So
Hit us.
Here we've got, so if I'm day trading the S&P and I see these long wicks here, and then I see a lower high double top and this bearish 1OP cycle right in here, yeah, I would short in here, but I would not short right here, which a lot of novices would. Oh, there's a breakdown below VWAP. Oh, I'm going to get short. This could very well be a head fake. And look, we've got that long green bullish engulfing candle. So there's a little bit of money to be made in here, but I would be taking gains on any short because mixed price action in here tells me that the move either way is not going to be that strong and I'm not going to be able to ride the trade. So right now I'm seeing that we're pretty close to the low and I'm starting to look for some bullish day trades. Well, if I look at JPM, this is highlighted by someone in the chat room, market last 6 bars, down, 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 down. JP Morgan bouncing the last 6 bars off of VWAP. So look at the daily chart first, because that's what we really want to lean on. Hey, nice. All these gains are preserved. Stock is compressing near its high. And today it was breaking out early in the day when the market was still down and floundering around. JPM was grinding higher. Now, past price action sets the table for what we should expect now. This is a financial stock. It's choppy as all hell. So we don't chase breakouts. We buy dips. And then as the stock rallies up towards the high, for my day trading long, it's a financial. I'm aware of that. It's not going to be go, gotta have it, run to the moon. I'm going to be taking profits somewhere near the high of the day, but this is a beautiful entry point.
See here. It's odd, you know, obviously I always keep SPY up on my screen, as everyone should. You keep the 5-minute on SPY, you keep the daily on SPY. You don't have to keep the daily on SPY up if you know exactly where it is and where the levels are. But I find myself recently, I tend to keep NVIDIA up as well. Just fascinated to see how it's doing. It's obviously struggling with 800, but damn, that stock just doesn't quit. And it's funny because, you know, NVIDIA is a perfect example of listening to the pundits, because you can listen to one and it's going to say it's a bubble and it's going to burst. You listen to another, it's going to say it's going to go to 1,000. So listen again to the price action, and right now NVIDIA is untradeable. But I like just to keep it up anymore. Market's back up to VWAP again. Pretty quick recovery right there. Let's see if it breaks on through. I'm watching it pretty closely to see if the market can regain VWAP here, confirm above it. Once again, you have a decent entry for your longs, meaning that they tried to take the market down below VWAP. They tried to start a bearish trend here. It looked for about 10 bar, about an hour, that it might be successful in doing that, but it seems to have bottomed out. Now we need to see VWAP broken again, and we need to see a new upward trend form on the M5. If that happens, be patient. Wait for VWAP to be confirmed. Don't just like, oh, it just broke VWAP, great, let's go long. Give it a candle or two. Wait, trust me, you're not missing out on anything. Give it a candle or two. If it's confirmed above VWAP, then you can start dipping your toe back into the longs again. And if you held your longs through that chop, Well, now you're rewarded for your patience that you did not freak out over a couple of M5 bars.
And you've got a bearish cycle completing and a bullish cross about to start. So that gives you confirmation. Now, the one thing that you've learned from this recent price action right in here, we're always learning from what we see before us, is that we should not expect that go rally. In here, it was still possible. We had this small little pullback here. Now we're seeing this double top. Okay, maybe we compress for a bit and then we fill in the gap, and that would get us into a pretty bullish mindset. We didn't get that. We got this, which tells us that there are sellers. So when we get long here, we temper our expectations for the upside for day trading. So we know that no, we're no longer expecting to hit 507.30 or higher. Now we're looking, yeah, we'll probably get back to the high of the day. So I can't ride my longs as hard as I might have back in here where I thought we had a chance to continue higher.
Boeing just flashed through my screen. Yeah, if you really want to punish yourself, trade Boeing. Very few stocks are on my no trade list. Boeing is on my no trade list. And I don't imagine it's going to come off any time soon. The doors on their planes will come off faster than that stock will come off my no trade list.
I think we get a lot of questions on this too, and it's one of those, this stock looks great. Hey, Boeing looked great. It had relative strength. The market down, down, down. Stock up, 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 and then it falls apart. And so all this relative strength bullshit just gets thrown out the window with Boeing because it just doesn't behave.
Mm-hmm. And by that, I mean, look, there are certain stocks out there. ABBV used to be one. It's now recovered. It's a lot more stable. There are certain stocks out there that you will find don't respect technicals. Now, technicals go far, right? Technicals are an all else being equal. There's nothing, all else being equal. Here's support, here's resistance. Not all support and resistance are created equal. An Animal Farm thing here. Some are more potent than others. Some are harder to break through than others. Generally, a stock will abide by those properly identified levels of support and resistance because institutions are abiding by them. So because institutions are abiding by them, the stock will abide by them, right? Vice versa. However, certain stocks don't. And because they're extremely volatile, they're extremely news driven, that suggests to you that there is an indecision around the stock institutionally. Their institutions are not very adept, which I have found shockingly over the last year and a half, at short-term trading. They're just not. They're adept at long-term holding, not short-term trading. And even long-term holding, they get it wrong many times, but they really kind of suck at short-term trading. And what they tend to do in short-term trading is just you react. And so Boeing is a reactive stock. By that I mean every single day, scroll through a news feed and you will see some major Boeing news on something. Someone placed an order, someone canceled an order, some door fell off, some screw fell off, some engine had a problem. Whatever it is, Boeing is always there. And every day that news is going to make the stock go up or down. So that's what you're betting on. You're betting on the news. You're not betting on technicals. The more you can rely on technicals, the more. That's why I like Home Depot right now. It is a purely technical stock. Yes, it dipped here and it's staying, but it's going to, Home Depot tends to do that, relieve a little pressure, come back up. But usually, other than the end of month, Costco numbers that come in sometimes, Home Depot will follow the technicals. That's when we say, when Pete looks at a chart and goes, this is a choppy stock, or this is an orderly stock. An orderly stock is following the technicals. It's following support and resistance. A choppy stock tends to sometimes not. Over the long term, it may, right? Over the long term, you might see that upper thing, but intraday, which is what you're trading, swing trading, a couple of days, a week maybe, you can get totally screwed by a stock that says, fuck it, I'm not going to follow support and resistance. I'm just going to break through that. Oh, now I'm going back down again. Now I'm going up again. That's a choppy stock. So know every stock has most stocks have a personality. Know the personality of your stock. You could see it in the ATR. You certainly could see it in the daily chart. And make sure when you're trading that stock, you got to be prepared for a roller coaster of a ride if you're trading a stock like Boeing. I don't personally love roller coasters. I'm not getting on it.
All right, so I was just taking a look. Yeah, so Home Depot's right at the VWAP. You know, you're not freaked out by this move here. You bought a dip. That's, you know, everything's good. The stock does move up and down. So if you look at the price movement in Home Depot previously, you realize that it does have some cycles to it. So you expect that when you're going into the position. You don't expect that, oh, I bought it here and it's just going to go straight up. It's going to move around. So mentally prepare yourself for the fact that it's probably going to move against you at some point in time. And then when it happens, you're not all freaked out about it. Oh my God, I got to stop it out right here. Good question that came up. Do we take short positions to hedge our long positions? So I'll kind of let you talk about that, Harry.
Sometimes I do. I mean, look, I've been using this year successfully. So you've seen it in the challenge, certainly a certain number of SPY straddles and strangles. What I like about that, for example, if I'm overly long and I see the market at a pause, meaning I'm fairly confident if the pause is not going to last, it's going to continue upward. However, there's always a chance in some news event, something the market will break to the downside. I do a straddle. And because when you're in compression like that, when you tend to break compression, you get an oversized move, right? So that's when I'll hedge by, hey, if the market goes up, I'm good because I was straddle on the upside. If the market goes down, I at least have some cover on it going down here. That's if I'm overly long in my portfolio. I don't play VIX anymore. VIX is ever since daily expiration on SPY came out. VIX has been somewhat of a kind of useless measure with a dropping ATR that makes it almost laughable. VIX only now works kind of at the extremes. You see VIX go above 20. Okay, that's significant, but other than that, no. Which isn't to say if you find a good short position, right? A stock that right now the market's down a bit, it certainly wouldn't be against any type of our method or rules if you took a short right now. But let's just say you took a good, strong short position right now, and you just happen to have a lot of long positions. Well, I mean, take a look at, for example, Hershey's, HSY. If you look at Hershey's right now, Hershey's is broken below support, both levels of support. So there's major support there with the 100 and the 50 SMAs, broke below that on Monday, continued down yesterday, continues down today. Hershey is right now a pretty damn weak stock. Is it, I mean, I might even, for the challenge, take if it stays that way by the end of the day, I might take a couple of puts on Hershey simply because I would do that whether I'm hedging or not. And that's usually the best kind of hedge. If you would take the short position, whether you are hedging or not, it's probably a good position to take. And if it works as a hedge, all the better.
And so you can see here how you have relative weakness. You can see back here when Hershey's was falling apart. What do you think the market was doing right then? It was rallying like mad. So yes, relative weakness. You could have made plenty of money on it. The stock has to stand on its own as a short. So what I mean by that is you're trading against the market. You know the market's going higher. This stock has to prove to you with lots of red candles, breakdowns like that, heavier volume like we're seeing, that it has sellers. So it's oblivious to what the market is doing. Institutions are exiting. And I believe that you had a short not too long ago, a couple of weeks ago. It was a nice one on Lulu, this breakdown here. I think about a week ago, my pick of the day was Apple short. And the caveat was that we needed a weak market, but you can see that that relative weakness is there. With regards to hedging, I personally, if there's a short that stands on its own, I'm going to take the short. I'm not a hedger because if I feel that I need to hedge, then I am going to reduce my long exposure, period. I want to stay in cash. I want to be flexible. So if I'm worried that the market's going to be rolling over, then I'm going to be taking less long positions. And I'll tell you about mixing longs and shorts. When you had this bounce off of the low, there's hardly any red candles in here. There's no doubt you just don't need to be taking any short positions in here. By the way, Hershey's might have been one of the only stocks you could even find on a short search. There were hardly any. That in and of itself tells you which side of the market you need to be on. And so, lo and behold, we start getting up into this area now where the market starts getting a little loose and a little choppy in here, and it's getting a little tired. All of a sudden, in this period right here, the last few weeks, there are a lot more stocks coming up on our bearish searches. So you've got more to pick from. That's because some of these gains you're seeing profit taking in some of the stocks that were being dragged higher by their hair. And yes, there are some better quality shorts up here.
All right, as a general rule, if you're saying I'm having trouble finding longs, having trouble finding shorts, that's a commentary on the market also. And that should tell you maybe it's better for you to be in cash, or at the very least be in very, very light positions to dip your toe in. But if you're having trouble finding something that's on the same side of the market right now, like right now the market's down, you're having trouble finding shorts. Okay, well, like Pete said, that tells you something, right? That's information, that's context. Trading, and that's why a set of rules just doesn't, here's like checkbox, you should have that, but without context, you can do a checkbox, oh, this qualifies as a short, but context tells you, well, there's a reason why there aren't many good shorts out there right now. And it's because the market is still in a pretty good bullish trend overall. And taking a short right now could be dangerous because we all know that a stock may be relatively weak. Hershey, that's one of the things stopping me on Hershey is, yeah, it's relatively weak. Technically, it is a good short at the moment. But if this market turns around, I'll be protected because of that relative weakness, meaning Hershey will not jump up like everything else will, but I'll probably have to get out of the trade. So market, what Pete always says, market first. Market first is really, you need to have an understanding of where is the market, what is your context for this trade before you take it.
And right now, the context is very bullish. So what am I looking for here? What are we expecting for the next couple of weeks? Well, we don't have any big news coming out. We've got the official PMIs coming out. There's the PCE deflator coming out tomorrow. This is the second look at it. There's some marginal Fed speak, but that's all just saying, hey, don't expect a rate cut until July at earliest. ECB said they probably won't cut until the Fed cuts. So is it weighing on the market? Not really. As long as the economy stays strong, we'll be watching what happens in here. We've got some swing trades on, but we're not heavily exposed at this juncture. What would change my mind? What would reinforce the fact that the market's going higher? So what would get me more bearish is long red candle, long red candle. Uh-oh, something changed. We took out this support level. We're taking out this support level, and now we're starting to get a very deep pullback. But even if I'm a long-term swing trader with maybe a 3 or 4 or 5 month horizon, what I know in the back of my mind is I don't have to be shaken out on a pullback like this because these buyers are so damn strong. They've been in their asset manager buying like freaking crazy. So whatever it was that caused the market to get spooked in here, I know that I am still going to get a bounce, and a really good bounce at that. And when it starts to stall out close to that high, then I know it's time to exit my long-term swing trades because now I'm confirming a double top and there is resistance. But I will get that bounce. I will get that second chance to exit my trades because the price action here has been so freaking tight and institutions are so active in buying that I'm going to get those buyers back in. And I'll have my exit point here. So get a couple of long stacked red candles. That doesn't mean I got to puke everything out. Wait for that bounce. Don't miss your opportunity. Lower high double top. Okay. Plus any little bit of money that I lost, I know I'm going to make that back and some because now I have new information. And that information is that the selling pressure is building. And now for sure I'm going to be looking to take some shorts.
Now, I would need to see the daily on SPY break through that NVIDIA gap up. if that
Mhm.
gap up is holding
Right here.
very nicely right now. But I would really need to see SPY break below that massive gap up we had due to NVIDIA earnings. I don't see that happening. So until I see SPY getting into that gap, my overall outlook is bullish on the market.
Yep. And so what we want right now is we want a brief, shallow dip, or a sideways compression would be even more bullish. All of these gains are being digested. Any profit taking that we're seeing up here is being gobbled up. It's going to take time. Then eventually, buyers who are looking to buy the dip are not going to get the dip, and they'll be raising their bids. They'll get a little more aggressive and a little more aggressive. And then the market will start to float higher, and it'll make its next leg higher. We could, and this would still be very bullish, we could also get a pullback to this AVWAP-Q around the 490 level. I would still be fine with that. That's just a normal pullback in a bull market. It tells me that the selling pressure is a little higher than we've seen before, so it tempers my upside expectations, but still a very good entry point for another leg higher. That's what we're looking for right now.
So there you have it. You have our picks. You have our market analysis. I don't see any other questions out there.
I don't either. Yes, Crocs I had put up a couple of times here. That's a good looking chart. I like it. And there you can see you've got this little pullback. There's your flagpole. Earnings before the open. Stock pulls back. It climbs back above AVWAP-E, and now it's making a new relative high, and it's continuing to climb higher, even when the market has been down here during the last hour. The stock has been able to preserve all of its gains. That's a nice looking chart.
Someone did ask, CVS looks tradable right now, but am I right to say this is a low plus trend line that shall not be named? Funny. Starting from January 25th. Thank you. You got the trend line correct. Electrotrote. You got it correct. Yes, it has a support level there that it bounced off of to the penny today on CVS. So unless I would put an alert there, right? But the problem is once you trigger that alert, then you're looking at your 73.28 resistance on the SMA 100, and then right below that, 71.77. So you have a support. So you have a lot of levels of support below that trend line. So, you get to maybe day trade it, peck out a couple of dollars maybe, but the ATR on it's not that strong. I agree it looks weak, but there's too many layers of support there that are too close together for me to really consider any trade on CVS. And someone said, I'm having trouble with defining confirmation. Well, there's all different types of confirmations. A lot of people have problems with this. Intraday confirmation, daily confirmation, and so on. And the standards for each are different, right? So, for example, let's use CVS right now. Look at the intraday on CVS. You have confirmation that CVS has bounced above VWAP, making it a bad short at the moment. It has gone above VWAP and went above VWAP at 1045. And then it came back down to it at 11:35 Eastern, and then it hung around it and then broke above it again at 11:45 Eastern, and then it just continued going up from there, and now it's in consolidation. So that's enough for intraday support. But if you're looking on the daily level, you do not have confirmation on CVS that is going to break below its trendline support, right? It's bounced off it. You would need to see a break below that, and you would need to see at least another day confirming that break below that it is going to remain there, and it wasn't just testing it and now going to come back up the following day. Volume also plays into it too. So, low volume confirmation, you obviously the higher the volume, the better. The higher the volume, the more confidence you can have that a break of support resistance is confirmed. But you really have to put your mindset, not in the mindset of a retail trader, but in the mindset of a lot of liquidity saying, okay, am I confident this is broken through support? And you need a certain, because if you get it wrong and you start selling it, and it was just a test of support, it bounced up, well, you're kind of screwed. You're not going to keep your job very long. So the more conservative, the better. it is on confirmation. It may cause you to miss a couple of things. It may cause you to get in late on a couple of things. But the more conservative you can be on your confirmation bars, daily and M5, the more likely your higher success rate is going to be on the trade.
So kind of a recap on picks here. You know, I think I'm going to go with JPM just because ACMR had such a big rally. I still like it. I think that's a really good breakout, but I like JPM. The news, the big news coming up in the next week and a half is going to be the jobs report. Lots of jobs is good for banks. It means people are employed. They can pay their bills. Their bad loan write-offs are small. So I like that. They're going to do well with interest rates staying higher for longer. The Fed has been very consistent with that. And we've got this nice little breakout in here. Yeah, I think JPM is going to continue to move higher, and also consistent with what I try to encourage people on earnings announcements is let the news kind of die off for a little while. Make sure that these gains hold and that you give 5 to 10 days for the stock to really kind of settle out. Then you're going to get your true colors. SNY is a bullish explosion alert, and I'm not seeing anything there, so I would ignore that.
Sony, what the hell does Sony have to do? Oh, Snapple. Okay. Oh, well, yeah, because it shot all the way up to 49 and then pulled back. In fact, if you look on the daily chart of SNY, it shot right up to the SMA 50, SMA 100, and then snapped right back below it, which is not a good sign. So I would not take that bullish explosion.
Right. And the bullish explosions, we've had some real dandies come up recently. So they're basically looking for massive volume spikes on a 5-minute time frame relative to the average volume 20 periods for that same 5-minute period of the day. And then we're also looking for that price action to also get through some key resistance levels. So Home Depot was your pick. I like it. I think it's going to continue to move higher. And just wanted to see, we've got retailers posting earnings in the course of the next week to 2 weeks. And here you can see Home Depot had already released, and it's just continuing to float higher. Parting market notes is that we're starting to get a little bit of a double bottom right here in this recent move. We've got a higher low double bottom. For longs, I'd be waiting to make sure that this support confirms, get above the VWAP, keep your expectations low as far as day trading. You're not going to have a huge melt up. You're going to hit resistance near the high of the day, but there's probably going to be some money to be made this afternoon. So that's all I've got for you. Anything else you want to add, Harry?
Nope, that's it.
All right, everyone, trade well, keep it light. Let's see what happens. See if the market continues to compress. Watch for that live event video next week where Will and I are going to go over Option Stalker Pro and all the features that we have and answer questions. So
sounds good.
Thanks so much for attending, everyone. Trade well. Bye now.